Mine is a Wi-Fi connected.
Yeah, Wi-Fi connected and Zoom very late and the
Zoom வேற இதுல நீங்க மீட்டிங் ஐடிலாம் போடணும் வேலை செய்யும் என் போன்ல லிங்க் கிளிக் பண்ணா வேலை
லிங்க் பண்ணா வேலை செய்யாதா?
You have to put the ID password அப்பதான் வேலை செய்யும்.
Shoot, அது எப்படி எடுக்கறேன்னு எனக்கு தெரியல. நாளைக்கு முடியாது.
இல்லையான்னு பிடிபடுறது இல்லையான் பேசல பிடிபடாது அடிக்கலாம்.
இல்லனா இது பண்ணுங்க ஹாட்ஸ்பாட். You can do on your hotspot. செக் எடுக்கணும்.
Oh my god. Oh my god. Oh fuck. என்டேல வேலை செய்ய அது எப்படி ஷேர் பண்ணுதா கிளியரா இருக்கான்னு பாப்பண்டுதா
My phone and go.
No, I can't handle two phones. I can't handle two phones on there.
இல்ல கொண்டு போ சொல்றேன்.
No. No. இல்ல பேக்ரவுண்ட செட் பண்ணி போட்டு காரைக்கு இருக்க வேண்டிய ரிசப்ஷன் சரியா இருந்தா சரி. இங்க பரவாயில்ல கொஞ்சம் காரை இடம் மாத்தினா சரியா.
Good evening, everybody. Hi, Jaideep.
Hello, hello. How are you?
Yeah, doing well, Jaideep. Yeah, how are you?
Good, good.
Yeah, okay.
Danya, sir. How are you? What's new and exciting?
Yeah, etc. Okay, good, good. Yeah. So you're outside, huh?
Yeah, I'm on the road right now, so I'm just taking an hour break.
Oh, good, good. Yeah, yeah. It looks
Yeah,
nice.
it's been like a day off, like especially for Saturday. So I've been into like training and all. So
Okay. Yeah. Okay. That's good, good. Yeah.
How come I'm not there? Okay. Oh, okay, okay, here we go. There, I'm on video.
Yeah, you're on video. Yeah, Walter.
Okay, okay.
Where
Where
is
are the
Leo?
monkeys? Okay, so let me see. Which one are you?
Yeah, Gannaya.
That Guyanda? Okay,
Yeah,
okay. Oh, Guyanda, almost like a country.
yeah,
Okay,
Guyana. Okay, yeah,
almost like Guyana.
yeah,
Okay,
Guyana.
okay. Yeah, yeah. Okay, okay.
Yeah, I think a lot of people they are joining now.
Yeah, Patel, Canadian investor. Okay. So there's supposed to be a training now going on or something, right?
Yeah, that's correct, correct.
I'll find out because I've never been on this yet. I talked to
Okay.
somebody, I talked to Leo or something on the phone today.
Uh-huh.
You know, Leo,
Yeah, I know Leo. Yeah, he's our mentor.
he's your mentor?
Yeah.
Okay, okay, okay. All right, that's good. Yeah, I talked to Leo for quite a length of time. And so I do skip the dishes and I do what would you call it? I'm a crossing guard. I cross the children during
Okay.
the school year. And I'm a little bit older. I'm in my 60s to say the least.
Okay.
So I was told to get involved with what do you call it? Multiple places.
Mm.
And I want to know, I got to have something that would be able to, uh, you might take a while to get there, but I want to get something that it can carry itself. It can, you know what I
Right.
mean by carry itself?
Yeah.
The rent that's coming in
Mm.
would be more than sufficient
Mhm.
to
Carry
run
the
the
cost.
place without me being really involved a whole lot.
Mm-hmm.
Yeah, something like that.
Okay.
What are you doing? What's going on? Seeing somebody's library, miniature library. Okay. So you can have a partner, you can have other people working with me. I could have my wife and I could have a couple of friends or somebody that is involved with the same membership or not.
I think Leah will give you like the how to proceed with your things.
Oh,
So
I
you
see. Okay.
talk to him. Yeah, he's the guy.
Oh, Leo. Yeah, yeah,
Yeah.
yeah. Okay, okay. So what's your position with this? Are you a trainer or are you
No, I'm also student like you.
oh, you're the same as me. Okay, okay.
Yeah.
All right.
Yeah.
You come on for the training. So when does it start?
Yeah, I think it's supposed to start. I think he's doing something maybe.
Okay, okay.
Oh, Leo is driving maybe, is it?
No, I'm not driving. I'm station parked. Don't worry. Can you see myself on my screen, guys? Good afternoon or good evening.
Yeah, you are I think the cell phone screen, I guess.
Yeah, because unfortunately today my family and three other families decided to go for a vacation 3 days. I didn't even put it in my calendar, so I had to be here. But of course, I'm in my car. Nobody's around. It's a beautiful surroundings. Only 1 hour away from Toronto, but still, yeah, I didn't want to have any disturbance in the cottage. That's why I came separate to my place. So with my notepad, laptop, everything, guys. So actually, it's the first time I try to share the screen. Are you really seeing the screen properly?
Yeah, I think there is a share device audio and then stop share. Only those
It's
two
top
icons
share.
we can see. We
Okay.
can't see your slides maybe.
Okay, even probably you don't see the screen yet, right?
No.
Okay, so this is the first time. So it is giving some trouble. Otherwise, I don't need to go the
I, I,
screen.
I say you are sure. Oh, there's, okay, you're back again.
Yes, very good.
Okay.
So I think this is Wilson, right?
Walter.
Wilson? Walter.
Walter.
I'm Walter.
Walter, yes. Okay, guys. So yeah, it's a very good number of people here, so we can start. I thought of sharing the screen. It would be easier. If that is not working, of course, I can still continue. So guys, anybody there to introduce yourself? I know Wilson, we had a good chat about 1 hour in the evening. So Ganaya is there. So is there anybody else want to introduce yourself before we start in 2 minutes time?
And introduce
My name
himself.
is Sharad.
Yeah.
It's Sharad here.
Hello,
Okay.
It's Sharad.
Sharad, okay.
Okay.
Hi.
Yeah.
Very good. So where are you from, Sharad?
Hi, my name is Saul.
I know you. I'm from Richmond Hill.
So now, okay. Bansal. Bansal, I think I
Sharad, the
talked to you
account
once, okay.
many times, yes.
Right.
Anyways, I'm on the road. I'm listening in. It's all good.
Okay. That's good. That's
I'll
good.
sit back and listen.
Okay. Anybody want to tell what you're exactly looking for in this meeting? It is all about VTB and the potential and possibilities with VTB currently in this market. You know, many people shut off their mind thinking real estate has come to an end, at least for some time. Anybody else having an opposite idea, or everybody think that way?
Have what idea? What do you mean? Like,
That means because the interest rate is high, so many people think real estate has come to a halt and we had to wait, things like that. So they don't think there's any potential for the time being.
interest rates are actually quite low, depending on how many years you want to go back.
Wow.
So you know, they were as high as 17 and 20% back in, I think it was back in the 80s. Okay. All right. I was very small back then. I was yeah. So interest rates, it's not really, it's what is the affordability of the properties more than the interest rates.
True. Interest rate is even 24 a long time back in 1980 and again 1990. But at the time, fortunately, the property prices were 100,000 to 200,000.
Well,
now the property value is 5 times higher. Interest rate 6% around.
Yeah, but the dollar, you everything was less money. So whatever. Okay, yeah.
So the reason I wanted to bring that point is, you know, many people think, we had to wait for the normal interest rate, but by the time the normal interest rate comes, everybody will jump in, you know. So if we are really going to go for an opportunity, we had to see when less people are fighting with us or competition. So now purchase wise competition is less because the interest rate put a lot of people into panic and they are not buying. They are waiting till the news come back and say, properties are okay, people are buying. So by the time that news comes, automatically the multiple offer or everything going to come, again, you are going to buy at a higher price. So if you all are thinking you as an investor, you have to buy with an investor mind. And in that case, definitely when many people are buying, you guys have to sell. And many people are selling, you have to buy. That is always the strategy. You know, you have to be in the counter opposite side. If you want to be with the same buyers, of course, you are doing the same thing with them. So when are you going to make profit? Of course, that is not the right time generally. So it always, Warren Buffett says, whenever people sell, I buy. Whenever they buy, I sell. So that's the case. So even here too. But of course, the real estate is really putting somebody or everybody to think twice before they go and see the property. So buying can be, you can postpone your buy, but at least you have to start looking for properties so that you will learn about it, because you cannot just get the first property itself an amazing opportunity. Sometimes, even if you see that, you will not understand it's a good deal, you will give up. So why don't you make all the mistakes now before you really commit and before you really buy? So I would say, yes, go and look for properties, because now it is summertime. It's the best time. Again, winter heats, you will not do that. And of course, by the time you see 3, 4, 5 properties, you will definitely see what property is really good. Then you can do that. And of course, the coaching is about 6 months to 1 year program. So by that time, you will have enough knowledge where you can start. Ganaya, why don't you share something about our last 3-day boot camp? Do you have any intakes, or do you have some confidence to look for any properties, or you have any questions still?
Yes, Leo, after the boot camp, definitely I got a confidence on how to analyze the property deals. Like you shared your tools with us,
Okay.
and with that we could you gave some different examples and how to creatively make the deal work kind of thing. So I'm a confident, and since I'm a realtor, I can access some listings in our board, and I was just checking what are the good deals out there kind of thing. And also, as you mentioned there, raising the capital is the main goal in the multifamily, because I can't bring all the down payment myself, so I need to bring other partners to collaborate with and make it happen kind of. So I was talking to some people. They are like a lot of people, they are rejecting the idea. Some they are telling, hey, yeah, when you bring have a good deal, bring it us. So there are mixed things, but definitely what I understand is we have to go through many people. So as many people as we want, then somebody will be tuning to our ideas, and then we can join partnerships, and then we can make it happen kind of thing.
Yeah, definitely, because investor mindset or a business mindset is not for everybody. Only 10% of the population may have that. And out of that, only a fraction of the population is going to work with you, because they may think you are not experienced, or you don't have enough knowledge or past record, things like that. So those are the hurdles you are going to start and come across and face it. But still, it's all in the game. But I always ask whether it is worth it or not to put any amount of effort to find your first property and wrap up a first property, whether with your own money or without somebody else, without your money. So that's a question. That answer is always yes, it is worth it, because we are not really talking about cash flow. Cash flow is only for the sustainability. Second one, of course, many people think of passive income. When you really think as a passive income, and if you think of replacing your income, your current income, whatever job you are coming from, with this real estate, of course, you have to buy enough number of units. So it's a process. So for that, many people are not ready, or many people or few people stop halfway. So it's a journey, not even regular businesses not last long because of their support and their mindset and their knowledge. So if they have the right knowledge and support, they will continue doing the business. Of course, we have to change here and there all the time based on the economic condition and market changes, things like that. But in real estate, only thing is economic conditions. Market change is not really going to do anything, because Toronto or Ontario is a amazing place for us to start, because population is coming more and more. So yes, and without other people's money, we will not be able to do a lot of things in this real estate long term, because that's how it is set up. Unless you have your own money for first property and second property, after that you will stop. If you really want to continue a few more properties, definitely you have to attract more people. But why don't you do that? Definitely it's a worthy situation, because you keep one property and stop with that, or bring another few more properties and share the profit. We can definitely do that. So guys, so that's opportunity. So here in this meeting,
Takes back. That means the vendor actually holds the mortgage or part of it. You actually pay him directly.
Yeah, do you hear me?
Yes, yeah, we understand. Hear you. Yeah.
Okay, guys. So here, our topic is, of course, buying multifamily property with VTB or zero down strategies in 180 days or less. So that is a topic, and many people have some questions whether it is possible. Definitely, it is possible, but at the same time, it takes time and commitment. No doubt about it. And of course, for that, you have to take your knowledge. And of course, I am the founder of Canada Investors Club. I'm a real estate investor and coach for 10, 15 years I'm into this real estate full time. And of course, this webinar is going to take about 90 minutes, 60 to 90 minutes. That's it. And at the end of that, of course, I'll be sharing that how you can work with me as a student, or how you can work with me as an investor, or you can even sometime work in a different manners. But if somebody is coming as an investor, of course, there are so much of qualifications as per the government law and Ontario security law. Other than that, we will be able to share, I will share that what I am coaching, so that you can take a decision whether you like to join or not. There is no compulsion. It is just an introduction. Okay, guys, probably you know what multifamily means. Of course, duplex, triplex, fourplex. That is the starting point of multifamily. Then you can go for fiveplex or 10plex or more than that. So you can put any goal into your mind, or put in your vision board, or wherever it is possible, as long as you can spend some time and find right people to work with. And as I told about, I bought about 10 properties worth about $9.7 million. And out of that, it's about $3.2 million capital gains I was able to make it out of those properties. The reason is the way we buy the properties, right? So normally we try to put that, what sort of properties we try to buy. So based on that, you can do that, but I'm not going to exaggerate the opportunities. You can start even $100,000 or $200,000 profit opportunity within 3 to 5 years time, at least a start. So as I told, that 3.2 million is unrealized gain, because if you don't sell the property, that profit don't come to you. Again, if the market comes down, the property, the unrealized gain comes down. If the property market goes high, of course, it's going to go high till you do the refinancing. And so that's the way we do. And many people don't like to sell the properties when they buy, because buy and hold is the best strategy in real estate. Unless you have any other reasons, you will not sell. And the way they try to create the generational wealth, the wealthy people, is proper corporate structure, and of course, some family trust type of things. So this is how they create the generational wealth and continue. And of course, if you really feel like, you can even talk to your lawyers how you can structure that for your start. Some people, before they start, it said they think of talking to their accountant and lawyer. Some people just start 1 or 2 properties, then they go to the lawyer. Either way, it is okay, because they have to get some understanding about that. Then that is easy. Otherwise, if you start at the early stage, after some time, the structure what you put, or the structure the lawyer recommended, may not be the most suitable one for you guys. So that is the reason. And as I told, in my portfolio, I have second mortgage, first mortgage, and even third mortgage, but I did not have any investor capital out of those 10 properties. That means equity capital, because equity capital, I have to share the profit. I was ready to share the profit, but the investors were little taking time. Before that, I had to buy, so I just bought that. Give me 1 second, 2 people on the waiting. Okay, that's done. So that's how I bought that properties. And of course, when we do with VTB or this debt capital, whatever profit comes to you is yours. You don't need to share the profit with anybody. But if you go with equity capital, of course, you'll be sharing the profit. But in my opinion, for long term, long run, sharing the profit is the best way. And of course, I have my disclaimer. Of course, I'm not a lawyer, I'm not an accountant, or I'm not a tax person here. I'm just sharing my own experience and opinion and knowledge. But you have to speak to your specific professionals for any specific advice. Okay. And in my opinion, multifamily is the safest asset class in real estate for so many reasons. Because first one is, of course, tax benefits. Second one is it's fairly recession proof. Even during the recession time, also multifamily continue increasing the values. And of course, unlimited growth potential, because that is the reason I moved from single family to multifamily, guys. Because after 5 or 6 properties, I couldn't buy any more. So I decided to go into a multifamily sector. So probably you will agree with that too. And the other one is, of course, if you guys really want to make more money, you have to clean up your mindset, because many people think buying multifamily will take a lot of time. Second category people thinking managing a property, a multifamily, is difficult. Third one, they think they need lots of money. Of course, it is true in one way, but at the same time, that belief is don't have to be always true. If that is the case, then of course your mindset is there. You are not going to move on. I'm going to share that why people are talking about that. First one is, of course, they think it'll take a lot of time to buy. Of course, even I took 3 years when I started multifamily because I learned a little bit. I tried to move from single family, but I took 3 years because I had to gather more information. I was a little busy in single family like that. And even after I bought 14 single family properties, it took that much of time because multi and single are fairly different, So you have to learn enough things in multifamily. And of course, I'm a mortgage broker too. Even then, it took some time. Second one, managing and increasing the market value is difficult. That is the second thing that many people are talking and many students are saying. Even I talked to many students even last week. They simply say that, yes, increase the value is difficult because most of the properties are fully tenanted, things like that. So they can't increase the market value, they think. And some people are saying Ontario is a tenant-friendly province, so we cannot do anything. We can't even evict the tenant. And some properties are negative cash flow, and there is no additional income. But which part of Ontario many investors are interested to invest in your opinion? Toronto, because it's mostly populated and mostly intensified with capital and investors. So many people are interested to invest in Toronto. And of course, in Toronto, you know that cash flow is somewhat zero or negative. Most of the properties in commercial. But even then, even many experienced investors are investing in Toronto. What is the reason? They treat this as a long-term investment. Real estate is a long-term investment. When it goes as a long-term investment, of course, they are not only thinking about the cash flow, they think about the cash flow and the mortgage payoff. And the third one is the price appreciation. And most of the real investors spend more focus towards that capital appreciation. So that is the reason they are investing in Toronto market. And they don't cash flow. Some people just keep the property. If it's a smaller property, they lock and keep it, single detached. Even then they try to get the cash flow by the time they are selling. I don't say that is right because that is not suitable for everybody. But there are enough people doing that because they like Toronto market and they trust Toronto market will pick up again, and it's always in the continuous growth, unless other than that small dips due to the economic condition. Because even last week, I think one of the questions we dealt with with our boot camp with my students, that property is a property in Toronto, and initially it showed negative cash flow. But when we analyzed everything altogether, it is giving about 20% return. When we can get a 20% ROI on a property or an investment in Toronto, people are okay to buy, okay to invest. Only problem, they should be able to take care of the negative cash flow with different strategies. But I don't want to just push that to any starting students, but that is what really happening in this market. And that is the reason many starting investors or entrepreneurs are not able to get into this market, because some people are okay even with negative cash flow. Sometimes it is very scary, but they think long term and they have the stability and strength to go for it. So that's the reason. So market value increasing is not difficult. You have to strategically go with some techniques and things like that. Definitely you can do that. And the other one is, of course, buying multifamily needs lots of down payment. That's the third point. They put it so that they try to put their interest into back burner and they don't even go into multifamily opportunity. But of course, generally it's about 25% down payment the banks are requesting. And again, bank mortgage, they feel it is difficult. More than it is difficult, it is different. Single family and residential mortgage is going in a different criteria, qualifying criteria. Multifamily is going with a different qualifying criteria. So not everybody is doing multifamily or commercial mortgages, sorry. So that's the reason. And of course, they think they cannot save a lot of money and wait for 3-4 years. So they think it's not worth it for us. But at the same time, it is still possible. So as I told, even though these three difficulties are in many people's mind, we have to really find how we can buy a property within 3 to 6 months time. The reason I stress that to 3 to 6 months time or 6 months to 12 months maximum is this economic condition, in my opinion and many other people's opinion, is not going to continue like this. You know, the interest rate is high now. Even if you type Google and see what would be the interest rate next year by September or October, it says about 3.5% to 4% or somewhere like that. Because by the time this inflation comes down or come under control, the interest rate has to come down, even though the recession continues. That's a general strategy and there is a general trend. So if that happens, of course, again, next year market will pick up. At that time, all the so-called investors and residential buyers, everybody will try to jump in and just raise the prices. So at that time, as a savvy investor with the knowledge, if you go, you're going to really struggle and fight with unnecessary people and give a higher price. So if you learn now, and if you can take steps in the right way before the other people starts buying, you can buy, because you are going to buy at a lower price and then you can even sell or continue carrying that at a higher price. Then you can do a refinance or what. That's the purpose. So the reason is once in a lifetime opportunity now, because of this recession and this inflation, if you look at that in the right way. Otherwise, of course, people will be fearful and they will never buy. And I don't recommend to you guys to join into that group. So what is the solution? How you can buy a property in this situation? First one is, of course, we have to have a unique proprietary process to buy property and manage properties, underwrite, analyze, and make it as a business. Second one, of course, you have to have continuous support. Third one, you have to have expert advice. And of course, the fourth one, you have to make it as a self-managing business if you are continuously putting more properties into this portfolio. So in my opinion, out of those three misbeliefs, first one, I say buying a multifamily property will not take that long, because I bought 10 properties in one single year. So if you try to buy one, and with the support of me or some coaches or mentors like me or proper realtor or whoever who really works in multifamily, if they can guide you, you can definitely buy very soon. And of course, it will not take a lot of time. And only those people who don't understand will take more time, whether it is real estate or whether it is a math question or anything. If people don't have the competence and skill, they will take more time because they are fearful. They don't know how to do it. But if you know how, and then if you understand everything, then there is no reason that you have to take a lot of time. And of course, even now, many investors, many savvy investors are putting offers, finding properties and bidding their properties and negotiating with the sellers for so many terms. The second one, managing and increasing the property and the increase in the profit is easy, in my opinion, because you are going to buy only the right properties and you are going to work with the right people. When you do that, definitely managing the property will be easy. One of my students, she is from US and 22 years in real estate investment as a property manager. If she can join one of you or any other investors, or if she can bring some investors, how easy would be to manage the property? Are you going to learn all 20 years of experience in 1 year? No. But you can definitely work with that type of people. Then definitely that part of property management is somebody else's job within your team. Whether you pay salary or not is different, but definitely it is possible. So managing and increasing the market value is definitely possible if you move in the right direction. And for example, I always say that if you buy a property with whatever the income currently, and if you can increase about $200 rental income per month, automatically it is $2,400. You are increasing that $2,400 increase in the rent collection per year will give you about 48,000 capital appreciation in that property in a market where the cap rate is around 5. So $200 increasing the market value of the rent is not that difficult, but sometimes you cannot evict the tenant in Ontario. But don't think only that as an isolated example. Not everybody is sticking to the building. There are so many reasons people are moving around. So when you go through that, you will exactly know whether you can do that or not. Because I've done that many times. It's definitely possible in Ontario as well. So $100 or $200 rent increase will help you to increase your market value $50,000. But is that happening in single family right now? Single family people are panicking and they don't give the right price. Sometimes, of course, a multiple offer is going, but the reason sometimes the realtors have put a lower price to bid here. Then from that lower price, of course, over asking and multiple offers are happening now, even now. But when you compare that from last year to this year price, most of the time prices are cheaper. But if you take a single family, multi-family property, if you increase that market value, or if you can increase the rental income, then definitely the market value currently much higher than last year property prices. So that is what we really want, and that is what we really do. The third one is, of course, finding multi-family property or buying a property needs lots of money. Many people are saying one way it is correct, but at the same time, when you understand this VTB and other capital raising techniques, definitely you can do that. As I told, in single year, I was able to buy 10 properties. Not only me, there are so many investors buy 10 or even more than that number of properties. So if once you learn that, it is not going to be difficult. And as I told, you have to have a proprietary process to buy a property. What do you mean by proprietary process? That is a specific predefined way of doing something in order to get a specific result. That is a proprietary process. In multifamily investment, the proprietary process, I would count this one as finding good properties. Second, submitting good offers and negotiating. Third one is underwriting the deal. Fourth one, inspection. The fifth one is due diligence. Sixth one is funding and finding the down payment. We call that as raising capital. Then the other one, seventh one is mortgage arrangement. Eighth one is operating that business. Ninth one, increase the market value. And 10th is the exit. Exit means, of course, it can be a sale or a refinance. Either way, we can say that as an exit. So that is how I was able to buy that many properties in one single year. Definitely you can do that when you understand how we do that. And I hope you may be getting some understanding and some confidence that multifamily is best and you can move into. Because how we come into this market, it is not that we are going to go to the university to learn about real estate. There is no universities teaching real estate that extent. Of course, Humber College is talking about or teaching about real estate agent license, but real estate as a whole, I don't find anywhere. So you have to learn that from people. And one time, one of my friends, he's an investor, he told one area is good to buy properties. That single word itself helped me to look for a property in that area. I was able to buy that as an under market value property. And of course, I was able to make up $500,000 within 1 year's time. So if one person's small information can help you that much, means when you learn, definitely you can do it. Another example, I spent about $7,000 or something on wholesale and lease options. And within 2 or 3 months time, one client came to me, and only option that I can do that client was wholesale, not wholesale, lease option. So I did that lease option, and at last it gave me about $140,000 profit within 3 years time. So one single knowledge helped me to that extent. So when you stick to real estate, definitely you can do a lot of things as long as you are not giving up that the trade or the line. So I can give one more example. As one property I purchased $845,000 with VTB about $150,000. And by the time I bought itself, the market value was about $1,025,000. And of course, now I increased the rent drastically higher, even in Ontario. It's possible because sometimes people are moving, sometimes we can negotiate. So many ways of doing that. When we did that, I was able to increase the price almost about 40%. So that increased the market value dramatically. So it's possible. Second property, as I told, $598, we bought it. And by the time itself, it was $1,125,000 appraisal value came. It's a mistake of the realtor. Then second time, after increasing the rent, we were able to get about $1.5 million appraisal after 1.5 years time. So these all are examples of some zero down strategies, but at the same time, we made some capital appreciation, because at that time, sometimes for the first few months, the cash flow may be nil or negative, or sometimes little bit of positive cash flow. But if you exactly know where this track is going, and if you really feel in 3 to 6 months time or 1 year's time, you can make that as a cash flowing property. And if that market value is going to be drastically high, then you can convince yourself and convince your investor partners to come on board. But that, of course, needs proper analysis, because if you try to bring other people on board, you should really know what you are doing. That's very important. And another example, as I told you, it's a commercial strip plaza with residential unit. They bought it about 1.3 and did some renovation. Within about 1.5 years to 2 years, the property value is about 2.5 million. But of course, if you have to sell that, sometime we may have to sell at a lower price because the demand is a little less now, as you know. If we are not in a hurry, definitely we can keep it. And then we can sell at a higher price later on. So here, none of them I'm talking about cash flow. Cash flow is the basis. So that's a basic thing we are always looking for. But our ultimate purpose is the capital appreciation. That is the reason we go into multifamily. Even another property, of course, we bought it for 1.1 and $200,000 VTB. We got it at the rate about 4% or something. And on top of that, I put up another $75,000 second mortgage and bought the property. Now the market value, even in this market, it's about $1.5 million. So the price appreciation, if you calculate the ROI, you know how much it's coming. It's really a big number in ROI, because many people keep their money in the bank for 1% to 5% rate. So if you can convince some people, definitely you can do that by yourself. Okay, some other properties I can keep going. That is not my purpose of this one. The purpose of this VTB training here is to make sure that you can understand VTB is one of the real strategies. But sometimes people come to my training and coaching only with an intention. Yes, I have to buy properties with zero down. Zero down is only a strategy, I always tell. First of all, you have to have a passion towards real estate, or at least you have to take that real estate investment as a business. Once you convince, yes, real estate will give you more profit in long run, then you are going to see how much money you have or your business partner has. If you don't, then you will think how you can raise some capital to buy a property. So this VTB is only a strategy. The strategy you will be using only when you determine your destination. That destination is a goal. If you think, yes, I have to make about $250,000 or $500,000 in 3 to 5 years time in real estate, that is the distinction. That is the destination. Once you decide that, then yeah, you can think how you can go. You can do the reverse calculation and see what and what else you need for that. At that time, you may see, yes, I may need about $250,000 or $100,000 down payment. How much you have and how much I short. Then you will think what are the strategies you will take it in order to achieve that one. So at that time only this VTB is coming. But many people are so much attracted towards VTB without even feeling that real estate is a job or business. They have to really work hard. At that time they get frustrations. So if they really feel that confidence, once they buy the first property, after that second, third property, they can easily do it, then they will definitely work hard towards that, because the payoff is really huge. I always say, after this many years of education or work, how much we save, if that is very reasonable or small number or negligible number, why don't we spend more time in real estate? Because real estate, for sure, we know it's going to profit. But many people don't realize the profit because they buy in between, they refi and take out the equity and use that again, take out the equity after some time. Like as and when year goes, property value goes, they try to take money out. Sometimes they put some money into other properties. That's a very good cause they are doing. But then they forget about that. They think, oh my God, I bought the property for $200,000. Now the property is about $1 million, but already I have about $800,000 debts. So what's the point of real estate? It's not that really, they are the one took all the $600,000 or $400,000 money out of that property as a refi, and they invested. Then it's a good cause. If they have spent that money, of course, it's a bad cause maybe. So that is how they really don't see the opportunity in real estate, even after owning some real estates. So if they can understand that, definitely they will be able to differentiate how much that real estate gave back to them without even tax. Because I teach this one as a tax avoiding strategy or tax planning strategy, not avoiding, tax planning strategy. And second one, of course, inflation. How are you going to beat the inflation? Because inflation is a major part. in the Canadian and US economy. And that is the one eating up all our earnings and everything. Otherwise tax. So if you can manage those two, or if you can eliminate those two to a minimum level, automatically you are building your wealth. But many people try to make lots of money, but they don't plan how to save that tax. It's a big portion, you know, that 20-30% sometimes it comes. So they should know that. Second one, inflation. You know, the easy way to work against the inflation is to capitalize the debt capital. When you try to buy some debts or take some debts, automatically you will be able to mitigate the negative effects of the inflation. So these are the two things we have to do. This is how the wealthy people create more wealth. So if you can handle that, definitely you can do that. For example, I can simply say, if you find one person as an investor, and every year or what, if you pay back some cash flow or whatever from the property, that can be treated as a capital repayment. When you do that, even for 3 years or 5 years, they don't need to pay tax for that, because we are treating that as a capital repayment. Then when you pay off the capital, actually, that's going to be at the profit share. So now we are only paying back the capital, so there is no tax. Again, of course, if you can get some debt about second mortgage or even a line of credit for about 5 to 7%, and if you invest that into this real estate, and if you are getting about 12 or 15%, automatically you are working against the inflation. Because if you keep that $10,000 or $100,000 in the bank and you are getting about 5% return, but the inflation in the commodity price goes about 10% rate, so net effective negative. But if you take that money and invest in about 15-20% return, automatically you are really get your net benefit about 5% to 10%. So that is a real growth. If the real growth is not there after 20 years time or 10 years time, your 100,000 is going to be totally valueless. So those are the main things that we have to really focus when we go into real estate. So many people don't look into that one. So, but as I told, this debt capital is a little risky. So you have to understand that because you have to pay the monthly payment and penalties and interest, things like that, renewal and all. So VTB, I always try to keep or treat that as a short-term strategy. So with that strategy, you can start buying properties. And after some time, you should exactly have the right plans and things like that, so that you know within 6 months or 1 year or 2 years or 3 years time, you should be able to replace that with the sweat equity into the property, or otherwise some shared capital from other shareholders, equity capital. You can bring some equity capital. I did that many times, because immediately I will buy a property with debt capital. After some, I will renovate the property or improve the property. Halfway through, after 1 year, so what, I will decide, yes, now investors are comfortable because they can see a property. It's already bought out. It's in our name or the company name. So they are not going to come and invest in a property that is not bought yet, so that some uncertainty is there. So this property, we bought it and we are already working on that. We had been improving and doing collecting the rent, things like that. So the investors feel comfortable. Then they will see, okay, from now, based on the value in 2 years time to 3 years time, how much could it be? Then if that value is about $500,000 more in 3 years time, then they will think how much they have to bring, then how much they are going to get. And if that return of capital, the return on investment is about 20% or 25%, they are very much happy about it. So like that, zero down strategy is definitely possible. VTB may be a starting point, and after that you can plan how you want to do that. These all we have to work as a business plan. So it has to go for property by property. You should do that. Of course, as I told, I'm very good in finding properties and adding value and getting VTBs. This is my strength and strategies, because for the last this many years I'm doing this. And I hope you will be, many people may have been convinced that multifamily is good and you have to go into this one. And of course, normally in our coaching sessions, we try to teach the advanced VTB trainings too. And we do that underwriting training, advanced VTB training, and raising capital. These are the major topics that we teach, so that they can really feel comfortable and they can really build their skill and knowledge towards multifamily real estate. And once they understand the multifamily, most likely they will not go back to single family, because single family has many disadvantages, even though it gives opportunity to start. Sorry. And if you guys have any questions, let me know. We can discuss. And this advanced VTB strategies, normally we do that. First, why should we go for VTBs? First question, we try to analyze that. Second one, how to structure a deal with VTBs. Second one, we try to do that. Third one, of course, how to get VTB in good deals, because some bad deals will get good VTB. Bad deals may attract VTB, but we have to attract VTB even in good deals. That's what we want. We don't want a bad deal. Otherwise, if it's a bad deal, we should be able to see how we can make the bad deal as a good deal. That's a great analysis that we have to do it, because not all bad deals are really bad deals. It looks like a bad deal. Then we should be able to make sure that how we can make it as a good deal. That is very important. In single family, of course, we don't even approach like that, because property is bad means property is bad. A capital multifamily, it is not like that. It depends on the creativity and how you're going and how you package the deal matters big time. Because otherwise, when one person thinks it's bad and sell, how come another person takes that as a good deal and enjoy the profit or make more profit? It's definitely possible. The other one, of course, how to make sure if the deal really makes sense, because when we go with a VTB deal, we have to really see whether this deal really makes sense for me as a buyer. And again, you have to see whether as a lender, will it make sense for the lender to accept that. Third one, of course, as a seller, you should be able to make some sense for the seller to accept a VTB for you. Because if the deal or any deal, if it is not a win-win situation, probably you're not going to win the deal itself. Even if you win that, of course, it's a one time, So we don't need to squeeze all the juice from the situation. So you can make it as a win-win in so many ways, because your problem is capital to start a property. So you need only that. The sellers may need some other things. So you should be able to give and take in a different way. So that is how we try to package the deal and analyze the deals in our advanced VTB trainings. So definitely you can do that too. And of course, we have to motivate the seller and agents that how we can do that. And of course, what happens if you don't get a VTB is another question, because sometimes people go with VTB mindset and they try to do or die to VTB. And of course, sometimes, like many people go into multiple offer situation, by the time they go, they will keep up in a mind, okay, I will not give more than $500,000 or $1 million for this property. In the multiple offer situation, when other people also bid on the property, when these people like the property, after some time, they forget about their mind or their limitation. They simply give over asking prices. So that is how they simply buy at a bad property or in the bid. And after some time, only after they sign up and come out of the deal table or bidding table, they understand, of course, they were totally emotionalized. And of course, it is not the way to do business, because after all, we are doing business. Whatever property you buy, you should not treat that as your baby. It is your business. So if you treat that as a business, you will always keep the proper booking and recordings and everything. And when a good time comes, you will be able to sell that. But some people treat that as a business, and then they try to go with the good and bad time with the property. It's not worth it. So you should really see how you can do that. And if you don't get a VTB, you should be able to walk away from that property. You don't need to just die for that. And of course, normally I try to share my story, how I started the project and how I started into real estate career. Many people know that, so I don't need to repeat that. But the reason, of course, I did not have down payment. And of course, first property within 6 months, I landed in this country I wanted to buy. So I didn't have money. So I had to really use other people's money. That is how I started. But second property also, I bought that in that way with some borrowed capital. But in 2009, I lost that property because I lost my job. And again, market turned in 2008. So the property prices came down a bit and tenants stopped paying rent. I didn't know how to evict a tenant. I was not a mortgage broker at that time. I didn't even have extra money to put it to the landlord tenant board. So like that, I lost that property. And after that, only I became as a mortgage broker. Then I was able to buy many properties with my knowledge. So that's how I came into single family properties. And after that, gradually I moved into multifamily. So this is not my story alone. Many people do that, and many people encountered the same problem like me. But only few people continue if they face a problem. One of my friends, close friends, of course, he's an accountant and he's a manager in a hedge fund company. So he knows about investment and everything. But in 1990 problem, he lost his house in bankruptcy. After that, he never bought any single property. And many other people determine, no, I lost this property, so I have to buy a property. So that only that mind shift or mindset really helped the other person to buy properties and put this person not to buy properties. So your mindset should be always a learning mindset. Sometimes the learning mindset is not easy when you try to work alone. So that's why this group and mastermind really helps other people so that they will be able to always in the right mindset. Because sometimes, of course, even we get so much of negativity from everywhere. So at the time, we have to really keep us focused for that mastermind and trainings and discussion with our coaches and mentors and things like that really helps us. Because if you really know our destination, we will not stop halfway. If you already determine, yes, I have to make about $5 million or $3 million or $1 million from real estate in 10 years time or 5 years time, if you know the exact destination, then of course you may change your path a little bit here and there, but you will never change the destination because you always keep your eye on the destination. You are not really focusing current situation. When you're totally focusing on the current situation, when that is bigger, then you try to stop. So you have to always keep why did you start in your mind, then you will never quit. So that is the only secret of success, in my opinion. So if you can continue that way, definitely you can do that. And so guys, if you have any particular questions in VTB, I can just talk about it. Otherwise, I can show some example here, because one of my students asked, how do you put this VTB in the papers? VTB is not a great thing in papers. It is all negotiation, how we talk to the sellers and things like that. When it comes to papers, your realtor or your lawyer will be able to draw up your purchase agreement and all these terms and conditions. So the lawyer will take care of that. But of course, it is not a big issue. So I can even show one example where we have our terms and conditions.
So Leo, I have a question here.
Yeah.
My name is Saurav. I'm from Surrey, BC.
Okay.
And I met you at a multifamily conference in Toronto.
Right.
Yeah. So as you're talking about vendor-backed mortgages, right? So, when you try to buy property and try to take this mortgage, right? Is it gonna be second or third mortgage most of the time on the property? And is the lender on the first place, that lender knows like you're taking vendor-backed mortgage, right? Or if they don't know, sometimes, let's say, then do you have to show enough money in your bank account, showing like you have enough down payment? So how that deal is structured?
Yeah, you already know the answer. What you said is correct. Yes, sometimes the lenders will be very strict on that. They will not allow or let you do a VTB. Then we try to come around techniques how we can do that. But if the lenders are not seriously worried about that based on the income or what, you can go ahead. It is really case by case. But as I told, it is only a strategy, not the destination. So if one strategy is not working, we may have to use another strategy. One thing. Second time, if by chance an A lender don't let you do with VTB temporarily for 6 months or 1 year, we try to go with the B lender. If the B lender also don't let you do it, we go with the private lender for a shorter period of time. Many times it gives some opportunity as well when you go for private mortgage for the initial stage.
Oh, that's great. So it means, and what about the loan to value usually? Like, do they really go with the DCR, or can we go just like 75% on the property, like for the loan to value?
Are you talking about the VTB or the
or the like the first mortgage, right, from any commercial lender for that?
Yeah, first mortgage, you can even go even 80% or 85% loan to value if you go through the CMHC deals or what like that. If it is purely commercial, residential, you get a chance. This MLS Select and some other programs are there with lower down payment. But at the same time, yes, they always look for the DCR and things like that. The first mortgage, if you go with the regular A lenders, they always go with your income.
All right. Because just one thing, like I was trying to just, I never bought a commercial property yet, right? I'm a student right now, just learning, right? So I was trying to run some numbers on some properties in Calgary.
Okay.
Calgary, I found like it's a kind of neighbor province to right? And it's much cheaper than BC here. So even, you know, if when I run the numbers, I found like based on DCR, right? If the property value is 2.2 million, which was listed, the bank probably gonna lend only 1.1 million on that, based on the DCR numbers and NOI and cap rate and everything.
Yeah.
So if they are lending only 50% on that 2.2 million property, then it's very hard to come up with 50% down payment, right? Like you probably need equity partners there to you know, collect that money, or you know, I don't know, then, or maybe vendor back mortgage, or even both the things, right? From the I think that then maybe it could be structured, but I thought like 50% is too low for the first mortgage. If
that is correct, because it all depends on the destination and how much worth it to fight for that. Of course, you are from India, right? Okay.
Yes, right.
So there are so many people, so many movies, one beautiful heroine, you undergo all the problems, still you want to achieve that because it is worth it to fight for. So like that, when you go into a multifamily property, you have to see the potential of that property in 3 to 5 years time, how much capital gain it can give by itself based on the market appreciation. Second one, based on your creativity of the property, you know, based on the property. If you can really feel you can make about $2 million out of that in 2 years time, and if you have to raise another $500,000 in different manner, if you don't have that money, will you go for it or not? Because $500,000 you have to raise and you're going to make about $2 million. If you don't raise that, you're going to lose the $2 million opportunity, and you're going to work back as the mortgage broker and make other people rich. $3,000 each deal. How many deals are you going to do to make that $2 million? So it's all depend on our, because it's entrepreneur mindset set. And so if that goal is big enough and worth it to fight, we will find all the ways to achieve that. And then we will see the cost and benefit analysis. So you are ready to give anything as long as it is worth it. If you can give everything, of course, you will not go for it.
Yeah, totally.
Yes, that's the way we try to do it. Otherwise, yes, not everything will hypothetically match with your dream or things like that, but it's worth it to calculate. And there will be properties that you will definitely be able to do it. And of course, you will make your money. The economic turns and here and there really put everybody into pressure. But at the same time, that's why this mastermind, we try to put it so that they can really keep up their mindset always up. You know, it is really, really difficult because from your spouse or your girlfriends and friends and everybody will talk about the negative.
That's true. Yeah.
But very next year, everything going to be upside down, at least next year or even 1 or 2 years time. But whatever we are doing is not going to give that much of money.
Yeah.
We've seen many ways, you know, whether it is another job or business, things like that. Yesterday, another gentleman, he is a real estate broker or agent now, 7-8 years. He used to have lots of business in Las Vegas and everywhere. And of course, he used to have a single condominium also in Las Vegas. And after that, he sold it about 7-8 years back before even COVID, because automatically the market turned down. And so the competition, so even though it's a franchise type of business, it comes down. So he sold it. Thank God he sold it. And now he's into real estate altogether. He understands that he should have done this real estate long time back with the professional support. He could have made more millions than that. So because real estate, there is no question whether Amazon or whoever going to come and capture, no. But of course, there are so much of institutional investors are coming to real estate market. You know that. Even the small single family properties, many institutional investors are trying to buy. Those days, they don't get into that. That is really for the common people. But now they themselves come. To that extent, it is lucrative. It has opportunity. So, but they cannot do all the strategies what we are doing, because when we do it, that economic scale is there, but at the same time, they cannot cut the corners. So individual investors still have lots of opportunity to cut the corner and control the cost so that they can definitely do it. So opportunities are a lot, but sometimes when you are working alone, it looks difficult. Of course, it is difficult. That's why I always say, if you understand it is worth it, and if you still don't know how to do it, that type of goal is the one that worth it to fight for. So that is one of them is real estate. Yeah, you can write down a number. Yes, I had to make about $500,000 or $1 million in real estate investment in 3 years' time. It's a big goal. Probably you will not know how to do it. Then you will reverse calculate or put whatever you need, money or people or knowledge or strategies or coach or mentors or any other partners, like you reverse calculate. Then of course you can move forward. Otherwise, we cannot connect the dots from here to frontward. We have to work backwards.
That's right.
Okay, guys, thank you. It's a good discussion. Yeah, so unfortunately, I couldn't share the screen. It's the first time I tried to use it my mobile and try to do the sharing. It didn't work out. I failed in that, but I will not stop with that. So it's not a failure. It's going to be a learning for tomorrow meeting. So, guys, for one example, when as a tip, I can tell you VTBs. Normally, we don't put the VTB terms and condition in the face of the purchase agreement, because sometimes, as you said, some lenders don't like it. And sometime after 1 or 2 months before the closing, you will decide you don't even need that VTB. Some other investors are bringing money. So if that VTB term is there in the face of the purchase agreement, sometimes the lenders may not like it. So I try to put that as an amendment in this contract. So if I don't need or if I don't use that, I can even discard that or whatever, cancel that or things like that. So I always go with the fresh VTB as an amendment in an amendment. It helps us big time. One. Second, of course, you have to have your exit strategies, how you are going to pay off, things like that. More than that, of course, you have to have an exit strategy for the property itself. In 3 years, I'm going to sell, or in 5 years, I'm going to sell. So like that, you have to really analyze all those numbers. That's what we call the property analysis and underwriting. We teach the underwriting in 2 different pieces. First one is part 1 to purchase. Part 2 is to sell, when you are going to sell. So this is how we try to go for it. And of course, in the coaching program, of course, we keep that as an advanced VTB training. So there we try to teach how we try to talk to investors and sellers and realtors and what else we can do to motivate and get these VTBs into these deals. Because good deals will not attract more VTBs, but we have to attract that because that's our purpose. So because we try to put that our coaching program as a infinite ROI system, because we try to increase the ROI for that VTB, and OPM really helps big time. So that's what we are doing. Guys, anybody else has any questions? Okay, so here I can tell about our coaching program. If anybody is interested, there are paid students and the guest students also here. So if you are interested, you can talk to us. Our coaching program goes as 1 year program. There we keep about 3 days boot camp. The last boot camp we had it last month. Next one is going to be in August, and that 3-day boot camp is full day. Nowadays we try to keep it on Zoom call, so anybody can join from any part of Canada or world. So that's 3 days. And after the 3-day boot camp, we try to keep 15 weeks mentoring session. For those who did this boot camp last week, the first mentoring session is going to be this Wednesday, 7 p.m. Eastern Standard Time. So you'll be getting the links and you can join. So there, if you have any questions, you can bring it. The second one is that 15-week mentoring session goes about 4 months. And every month we'll be having a monthly mastermind. So each mastermind we will be discussing individually new different topics. So that will go very deeper than in that 3-day boot camp. But the 3-day boot camp purpose is to give everything so that you will be able to start taking action. With that bootcamp knowledge itself, you can start taking action. Then every weekend you can come to the mentoring session. So there you will be getting enough support so that you will get your confidence again. Then we will also push you forward. So you will be able to buy a property within 3 to 6 months time. That's our purpose. And of course, I know one of my students recently, about 4 months back, he joined. He did not have enough down payment. He only raised about $120,000. And now he is planning to raise balance $80,000. Once he has $200,000, he will look for the property minimum $1 million. So that's a purpose. And one of the students already invested in US. And of course, in 2.5 years time, 75% capital will be paid back. Even after that, he will still keep the property. So that's a passive income opportunity he looked for. Now he is looking for active investment opportunities. He wants to involve into this. So after you learn our coaching program, you can go as a passive investor or active investor. Some people have more money, so they can continue to go as a passive investor. Some people have less money, so they may have to go active investors. But at the same time, even if you don't have money, if you can have gained this knowledge, then you can put together enough people who has money. Then of course you can still go as an indirectly a passive investor. It doesn't mean that you have to always work 24 hours on the properties. It all depends how you want to package it. So that's what that knowledge will help you to do it. So those are the 3 things of my coaching program. The 4th one is about we give out 5 one-on-one calls, so that 1 hour call you can book on Zoom call or in person in my office, McCowan and Finch Scarborough. So you can come and meet me. So either way you can do that, 5 Zoom calls, 1 hour. On top of that, we give out 5 10 minutes quick calls. That's anytime you can call me if you really have a question to be answered ASAP. If I miss the call, I will call you back. So that type of quick call really helps people to move forward and take action without losing any opportunities. Many times I've seen that. That's a great thing. It's only 10 minutes, so it's not a big deal for me, but it really helps my students to take their actions and move forward faster. So this coaching program is really packaged and promises that you can buy a property within 6 months time. And if any reason, because of your priority or what, if you don't buy, then of course I'll be working with you till you buy the property. So this packaging is really having, of course, we try to bring enough deals to you guys so that you will be able to get to know more deals or find some deals. So that's what we are working on it. Second one, we try to teach the raising capital part. So even if you don't have down payment, you will learn how to raise capital. The third one, we say you should be able to set up your power team so that you don't need to really spend your time with property on unknown things that you are not familiar with. For example, property management, renovation, and tenant eviction. Those are not something that you know. So I don't expect you to know everything, because getting know everything is a good knowledge, definitely. But at the same time, it is not really going to put forward you in the real estate career path, because you are going to work with one skill or one main thing. So when you can master on that, the rest of the things you should be able to work with the team. So we try to set up the power team with you guys wherever you are buying the properties. The other one, of course, first pillar, we say any quick fix, because some people really don't have money, so they are unable to start the real estate investment career, even though they are totally sold into that opportunity. In that case, they try to take it as a wholesaler or whatever, or bird dog, for example. That means they can bring some deals to us, and if the deal is very good, of course, they can get a referral fee. Or otherwise, if they are interested, they can even work with us as an investor partner. Then we will try to raise capital for that property and bring up the deal as a total package with me or my team or whatever. So this is the first thing, because some people are not fully ready, even though they don't want to wait for the opportunities. So that's the reason. So this is how we package this training and programs. So that 1-year program goes for $10,000. And some people really feel that is really difficult for them to raise the $10,000. And if they don't want to wait, we put that 6-month package as $7,500. The difference between $7,500 package and the 1-year package is the 1-year package will have additional 5 masterminds. That is the only difference. Other than that, everything else will be there in the 6 months time package, because even the 1-year package, we try to front load. So within 3 to 6 months time, they try to learn most of the things. So they are not going to lose much. And I give an opportunity, if by chance you really want to go for the 10,000 package, within 3 months time, if they bring back the balance $2,500, we will make that as a 1-year package. So even though the price is going up or what, you will be able to make that difference 2,500 without any additional payment. You can convert your package as 1-year package. So this is how we are doing. So within 1 year's time, definitely you should be able to have a property. It's our plan. This is how we are trying to work. So if you have any questions, I'm going to be here for another 5 minutes or 10 minutes maximum. So you can raise your question by chat, or you can talk to us now. Or you may have my phone number also. Anytime you can talk to my office or myself as well. Okay, I'm just muting, but anyhow, you can disturb me or you can talk to me. I'm still here for next 5 minutes, guys. And of course, the paid students, of course, the next training is on Wednesday, 7 p.m. We'll meet there too.
Okay, Leo, I'm leaving now. So you're muted.
Yes. Yes, Ganaya, we can see again on Wednesday.
Yeah.
And come up with your questions or works or whatever so that we can discuss. Sometime the previous batch students may come or may not come. Whoever who joined recently will be there. So we will go through that.
Yeah, yeah. Just drink water. Maybe you are a little bit.
Yeah, for the last 1 week, I'm suffering. I didn't really meet my doctors. Wednesday only, I'm going to meet her.
Yeah, yeah. And I noticed, yeah. So it's a thanks for your commitment, even though it's your vacation time.
Oh, no.
You scheduled and then you kept the promise. That's very good. It's very nice.
Unfortunately, the Wi-Fi was not good enough. Otherwise, I could have done in my house itself, the cottage. But it's clear enough. But I had to learn that sharing. Something went wrong on sharing. That's why I didn't do that.
Yeah, but the meeting went very well. Only except the sharing part is missing.
Yeah, man, that's true.
You were able to go through the slides and then explain. It's a very nice. Yeah.
Oh yeah, since it is my chapter, of course I know what I'm talking. Still, yeah, when the contents are visible, people may feel that more comfortable. That's what I wanted.
Yeah.
Next
Only
time.
suggestion for you is just maybe because you're talking too fast. Maybe that's why you may be coughing something. Maybe a little bit just slow. That's
yes.
You because you need a breathing time also, right? So yeah, you're talking too much. Maybe like a fast. That's triggering the cough kind of thing. Yeah.
True, because we have about 78 or 80 slides. So I have to cover that, but I don't want to put too much of hours because everybody have some commitment in summertime. So I wanted to confirm, but only question I have is, am I really too fast so that people don't understand?
No, they're able to understand, but since you're talking too fast, you are getting cough. Maybe that's not good for you, not for us. Fine. Yeah.
Thank you, man. Yes, I'll be up very soon with this, so should be able to manage it. Thank you.
Okay, thank you. Bye.
Okay, good night. Okay, guys. Anybody else? If you have any question, talk to us, call us, so that we can meet soon. Thank you, guys. Take care.
Hi, Leo.
Yes. Who is this?
Oh, thank you. My name is Bart SABN. Thank you very much for the powerful presentation. So I was just hoping that you send the slides via email. I don't know if that's possible for you. For us to get the slides via email.
Okay, I will check that and get back to you on this one. Your name is BARTH, right?
Correct.
Okay,
Yes.
what are you doing actually? Are you a realtor, or what do you do exactly? What you're looking for in multifamily?
I basically do Airbnb right now.
Okay.
So I just rent properties and I Airbnb them pretty much.
Okay, that's good. So you buy properties and rent it, or you have some other people's property and you do it as a super host, or what?
So I use other people's properties for that.
Mm-hmm. Yeah, now you can start using other people's money and buy properties, because definitely multifamily is a bigger opportunities. With what you are doing, you can definitely do this one if you are seriously interested.
Absolutely.
Yeah.
Absolutely. Yes, I'm looking to do that.
Yeah, I think it's the first time we are talking. Yeah, man. I will talk to my manager and see if they can give the slides. They will get back to you on this one.
Okay, I appreciate that. Thank you very much, Leo.
Thank you. Take care, man. Thank you. Volodymyr, you are there. If you have any questions, let me know. Otherwise, Lai, it's the first time I think see here. Do you have any questions?
Yeah, Leo, just only appreciation for your input. Thank you. Thank you very much.
Thank you.
Yeah, it's amazing how much knowledge you have and you're willing to share. Really glad to be part of this webinar. Thank you very much, Leo.
Yeah, thank you guys. But it's only an inspirational. That means, of course, multifamily is a good opportunity. Even if we don't have down payment, we better step into that. That's all we are feeding here. When we go into deeper in this deep analysis of VTB trainings or even underwriting, and then only you really feel how to buy properties. That's the ultimate purpose. But definitely, yes. Thank you so much for your comments, and look forward to work with you guys if you're interested. Okay. And Lai, I don't think I've met you before. If you're interested, you can share. Otherwise, we can close for the day. Ray Lawrence is there. We already talked to him. If you want to share anything, you can talk, Lawrence.
Well, you shared a lot of good information today. And
Okay.
appreciate the time you're taking to help people with this knowledge of yours. Very rarely we come across somebody like you who takes your time, sacrifices your time to help other people.
Yeah, definitely. Thank you. It's a mutual benefit too. It's not that I'm benefiting or only other people benefit. But thank you for your comments. Definitely lots of opportunity there. People are still looking for the ways to make money. And even some people talk to me even yesterday, they spent about 8,000 or some dollars, US dollars on some training. And after that, they couldn't do anything. But I asked, okay, is it a mistake of them or you? Because sometimes people dump the money buying the courses. After that, they don't really take anything. They don't do any steps towards that because they are busy. They try to buy their, they move forward with their daily things. So that is another part. But in my case, in my coaching, I want to make sure that I don't miss anything in our side, so that if by chance my students delay their buying, it should be their priority. That means they decide, okay, not this year, next year, like that. If they put all the commitment, they should be able to buy a property, and they should buy a property. That's my target. Thank you, Lawrence. Thank you for your comments.
Welcome.
Okay, guys. So we can meet soon. We'll see again. Good night.
Good night.
Thank you.